This is episode 255 of Zen and the Art of Real Estate Investing with my guest, Peter Neill. Peter is the co-founder and partner of GSP REI. I bet you know what REI stands for. It's real estate investment. He started his career working in marketing and sales at a distressed mortgage investment company, transferred that into investor relations and raising private capital. And now we're all the way full circle. Peter, welcome to the show.
Jonathan, it's great to be here, man. I appreciate you having me.
Yeah, I'm always excited to talk capital, raising capital, and that's where I want to start. And then we'll get to your background and how you really got into real estate. But what is the hardest thing about raising capital when you're new to it? Because that's what I think a lot of people as new investors, they look at one day, I may want to raise capital, but I'm scared.
Sure. Yeah, well, for me, I started raising capital at a firm. I was kind of right-hand man to the CEO, and he had a really great reputation. He did a lot on Bigger Pockets, wrote a book for Bigger Pockets. So that created an illusion, of maybe it being easier than it was. When I left and I started my own company and started raising capital for my own funds, what was different and what was like that was really like a punch in the face was the marketing side of the business.
Yeah.
I mean, so sales is one thing, you know what I mean? Like I like being able to talk to investors, build rapport, connect with them, find alignments in interest and values and investment goals and things like that. That's one thing, and some people I think are better at it than others, are more natural at it than others. But the marketing is a whole nother piece. You know what I mean? Like back then the phone just rang.
Yeah.
I kind of knew how it happened, because he wrote the books and he was on Bigger Pockets all day, every day. And, went to a lot of events and just years of compounding the reputation and the brand and all that kind of stuff. And then starting on my own, having to do the sales and the marketing side of the business. I mean, that was the thing. I mean, that's a lot. You know what I mean? That's having to market and stand out in this environment. Like the other thing too was doing this for 10 years now. The capital raising game has changed dramatically.
Yeah. Was that first property, was it a buy for yourself to live in, or did you buy an investment property?
So Dave was big on utilizing as many conventional mortgages as you could.
That's a shock coming from Dave.
I think you wrote a book on that.
Yeah.
So it didn't work out that way. I mean, I bought my first property FHA. So I lived in one unit, rented out the other.
Yeah. Typical house hack.
Exactly. Yeah. It was out of pocket like $3,500 or something. Yeah, I mean 3.5% down. The person before me lived there for a while, had fixed it up nicely and all, and had a tenant in there for a while. And but I learned the business very quickly. The people upstairs, they broke up, and the boyfriend, went back home, and then it was just on her income, and there was some struggle there, and she got another job, and so I very quickly learned the business. I ended up, my parents got in a car accident, so I moved back home and leased that out, and so I very quickly learned the business. And I learned too that that in order to be really successful in this business, you need to have some understanding of the construction side of the business.
Yeah.
You don't need to do everything and all. I mean, don't let it intimidate you. But to me, especially because PPR was evolving at that time too. I mean, they were like a second mortgage, like I said, like a workout kind of debt collection company in a sense. And they were transitioning into first mortgages, which a lot of those were vacant. It was more hard asset management.
Yeah.
So I started to see like, wow, they had to outsource certain things at that time too, on the construction side and property management side. And I thought, I need to get involved in the construction side of the business and get some experience there. So I was fortunate to meet my partner, Ron, who I'm partner with in GSP, and he's been in the construction business over going on 25 years now. And some of the guys on our crew have been with him for 15 plus years.
Yeah, that's awesome.
He's started as a builder. So I've been able to really learn that side of the business, and and just kind of I've really tried to touch every aspect of it as much as possible. But fundraising's always been my core, what I like to do the most, and it's a very important part of the business.
I think in general, there's really two different definitions of affordable housing. There's affordable housing that's more affordable than the norm, which is what we're really lacking. And then there's government subsidized or enhanced affordable housing. Which one do you guys do more and why?
So we call it, and this is a really important question, Jonathan. And I always say to people, you want to ask if somebody's talking about workforce affordable housing,
It's a big
ask them what
deal.
their definition is.
Yeah.
And because exactly, it can vary greatly. When we say affordable housing, we typically mean subsidized. And then we'll say workforce housing. So we'll say we invest
workforce. I want to make sure everybody else does though.
yeah, you know what I mean? So, and that's just saying, like, it's a better way to say it, maybe even is like middle income. You know what I mean? So it's low income, low to moderate income, and then middle income. And we look at affordable housing too, the way that HUD does. I mean, so HUD really does have a definition for affordable housing, and it's 30% of your gross monthly rent going, or gross monthly income going towards your housing costs. So not just your rent, but your entire housing. So really, we're trying to stay in that realm, whether it's being achieved through a subsidy or it's being achieved naturally through market rate. I mean, I think that's very important, and that's where you can get into a lot of trouble if the market changes or something like that, and you got a lot of people who are in paying 50-60% of their monthly income towards the rent, and there's a lot of people that do that. I always wonder, like, who the hell are these investors that are putting people in? They're like card dealers. You know what I mean? It's like, it doesn't matter. You know, we'll get you the loan today.
It's rented.
It's like, who's doing that? You know what I mean? Like, that's very irresponsible. And it's especially if you're using leverage. I mean, that's a very risky game to play.
Yeah, for sure.
But when you look at the data, it's like, I can't remember off the top of my head. I've used this in presentations before. If you Google it, you'll find it. It's like, I think over 50% of people are paying, they're like severely rent burdened. They're paying over 50%.
It's only going up right now.
Exactly. Yeah. It's insane. So how we look at it is like, typically, and we focus really more on market rate than ever now, more than ever. So we used to do a lot of subsidized, a lot of Section 8. We don't shy away from Section 8. We like it. If we can get, so a lot of times they're paying market rate or above market rate. And they'll fund a lot of the good portion of what the rent is. In some cases, 100%. So that's nice. I mean, now the issue became for us is that, especially in Baltimore, where a lot of our Section 8 properties are, the city, the office is understaffed, I guess would be the best. I mean,
I don't think that's going to change. It's actually going in the other direction right now. Tell us what GSP does, like what your main core assets that you're looking for. And then after that, tell us where to find you.
Yeah. So, so what we do is we manage funds that acquire workforce and affordable single family housing throughout the Mid-Atlantic. So we do a lot in Baltimore, Philadelphia, South Jersey, and we really specialize in blighted homes. You know what I mean? So fully distressed property, something we can pick up at a very significant discount. We're vertically integrated, so we go in with our construction crews, redevelop the home, reposition it, lease it out, and then, we're a long-term buy and hold company. So everything we buy, we look to hold long-term. Sometimes we certainly sell, that kind of thing. But for the most part, when we buy something, we always want to say, can we hold this for forever, kind of a thing. So we manage a couple funds, we raise capital through accredited investors, and that cash is used to do the purchase and the acquisition. We put long-term financing in play. It's kind of like a big BRRRR strategy.
Yeah.
And we're still making that work because we can buy at such a discounted price and
in bulk.
Exactly. And in bulk. I mean, because that's the thing with single family. I think a lot of people, I like to say, like, taking a commercial approach to single family because the scale is important. And a lot of times I feel like some of the stresses you hear about in the BP forums and things like that about single family is because people don't want to do what it takes to really nail that out. I mean, like, we're running a construction company, we're running a property management company, we have the acquisitions process down and all that kind of stuff. Like, that takes a lot. It takes a team to do it. So a lot of times, like, when people say about multifamily, it's like, I think it is right for a lot of people, especially if they're going to be active. You know what I mean? It's like, that is right, because single family is the same in the sense that you need that scale. You know what I mean? So, and that's, I think, where the fund gives people an opportunity to diversify right off the bat into a fund opportunity where you can have the professional management behind it, you can have the scale behind it, all that kind of stuff. So that's what we do. How people can find us at gsprei.com. And I'm on LinkedIn. I'm trying to get pretty active on there. So Peter Neill, 2 L's, Neill.
Yeah. And what's your podcast called?
That's called the Accredited Investors Only podcast.
Awesome.
So we've had a lot of amazing people on, and we're about 28 episodes in when we're
Nice.
recording this, and we've done a lot of episodes in the background coming out. So it's the goal there is trying to provide kind of a manual for accredited investors to get the most out of their accredited investor status.
Yeah.
In raising money for 10 years, I've seen a lot of people I think are doing it right, and a lot of people that don't know what the heck they're doing. So it's that's kind of the goal behind the brand behind that Accredited Life and the podcast Accredited Investors Only, is to introduce people to a lot of different opportunities and operators and strategies and things like that. And then we also do some workshops and things like that on kind of the accredited life and the stages we touched upon earlier a little bit. So